Just when the market was reeling from Tesla's recent sales slump, a major announcement has emerged that could significantly reshape the narrative for both Tesla and the global semiconductor industry. Elon Musk has confirmed a colossal chip supply deal between Tesla and Samsung Electronics. This is a game changer, and today we're going to unpack its intricate details and profound implications for the global and especially the US market and stock performance. This news comes hot on the heels of Tesla's disheartening Q2 2025 earnings report, which saw its stocks plunge by 8% due to weakening auto sales and fierce competition. However, yesterday Tesla CEO Elon Musk took to X to confirm a strategic multi-billion-dollar semiconductor supply deal with Samsung Electronics. This isn't just any deal, it's a $16.5 billion agreement spanning from July 26, 2024 through December 31, 2033. The core of this agreement revolves around manufacturing of Tesla's next-generation AI6 chip. Musk explicitly stated, and I quote, "Samsung's giant new Texas fab will be dedicated to making Tesla's next-generation AI6 chip. The strategic importance of this is hard to overstate," unquote. He further emphasized Tesla's active involvement, adding, quote, "Samsung agreed to allow Tesla to assist in maximizing manufacturing efficiency. This is a critical point as I will walk the line personally to accelerate the pace of progress. This is a monumental shift for several reasons. Currently, Tesla's AI4 chips are manufactured by Samsung, while the AI5 chips, which just finished design, are slated for production by TSMC, initially in Taiwan and then potentially in Arizona. The commitment to Samsung for AI6 and the sheer scale of the investment signals a significant strategic deepening of the partnership between these two tech titans. Let's dissect the implications of this deal, starting with its impact on Samsung. This $16.5 billion deal is a massive shot in the arm for Samsung's struggling foundry business. While Samsung is a global leader in memory chips, its Foundry division, which manufactures chips for other companies, has lagged behind market leader TSMC. In Q1 2025, TSMC held a dominant 67.6% share of the foundry market, while Samsung's share had slipped to a mere 7.7%. This contract provides a much-needed anchor client for Samsung's advanced manufacturing capabilities, particularly at its new fabrication plant in Taylor, Texas, which until now faced delays and a perceived lack of customers. The news immediately sent Samsung's shares up by as much as 3.5% on the Seoul Stock Exchange, marking its biggest single-day jump in nearly a month. This deal validates Samsung's long-term investment in advanced process nodes, including their 2-nanometer gate-all-around GAA process, which is critical for next-generation AI and high-performance computing applications. It shows a strong vote of confidence in Samsung's technology and its ability to deliver at scale. Now, for Tesla, this deal is equally, if not more, transformative. This agreement isn't just about sourcing chips. It's about solidifying Tesla's vertical integration strategy, particularly in its ambitious AI and autonomous driving endeavors. The AI6 chip is expected to be central to Tesla's full self-driving V13 platform and its broader AI computing initiatives, including the highly anticipated Cybercab robotaxi service. These chips will handle real-time data processing for autonomous navigation, machine learning, inference, and Tesla's in-vehicle neural networks. Securing a dedicated manufacturing line for these advanced chips is critical for Tesla to realize Elon Musk's vision of a massive robotaxi fleet and a future driven by AI and robotics. By committing such a substantial portion of its future AI chip production to Samsung, Tesla is smartly diversifying its chip supply chain. Relying on a single foundry like TSMC carries inherent risks, as seen during past global chip shortages. This dual source strategy significantly enhances Tesla's supply chain resilience, mitigating potential disruptions from geopolitical tensions or production bottlenecks. Musk's emphasis on Tesla assisting in maximizing manufacturing efficiency suggests a deep collaborative partnership. By having direct input and potentially even personnel on the ground at the Samsung fab, Tesla aims to optimize production, control costs, and accelerate the ramp-up of its cutting-edge AI hardware. This aligns with Tesla's long-term goal of achieving economies of scale in its in-house chip manufacturing. Let's broaden our view now to the wider market implications, particularly for the US economy and global stocks. The Samsung-Tesla deal, with its focus on Samsung's new Texas facility, is a significant win for the US semiconductor manufacturing push. The CHIPS and Science Act of 2022, which allocates over $52 billion in federal subsidies to boost domestic chip manufacturing, aims to reduce US reliance on foreign supply chains. Samsung's Taylor, Texas fab is a direct beneficiary of this initiative. A major long-term contract like this for a cutting-edge AI chip provides a critical anchor client for this US-based facility, creating jobs, fostering technological expertise, and strengthening the domestic semiconductor ecosystem. This aligns perfectly with the Biden-Harris administration's goal of bringing chip manufacturing back to American soil. While TSMC is also building fabs in Arizona with CHIPS Act support, this deal positions Samsung as an even stronger player in the US, intensifying the domestic competition for advanced chip manufacturing. This competition is ultimately beneficial for customers like Tesla, potentially leading to better pricing and more innovative solutions. From a national security perspective, diversifying advanced chip manufacturing away from regions prone to geopolitical instability, like Taiwan, is a strategic imperative for the US. This deal contributes to that broader goal by boosting capacity in the US. The deal sends a strong signal across the global semiconductor industry. It underscores the increasing importance of advanced foundry services for leading tech companies. While TSMC remains dominant, Samsung's aggressive pursuit of cutting-edge technology and securing such a large client demonstrates its determination to close the gap. This could intensify the race for 2 nm and even 1.4 nm process nodes, pushing innovation forward. The sheer scale of the $16.5 billion contract highlights the demand for high-performance AI chips. As AI permeates more industries, from automotive to data centers, the demand for specialized AI accelerators will only continue to grow, benefiting the entire semiconductor supply chain. The automotive sector, particularly the electric vehicle and autonomous driving segments, is becoming an increasingly critical driver of semiconductor demand. Modern vehicles are essentially computers on wheels, requiring sophisticated chips for everything from infotainment to advanced driver assistance systems and full autonomy. Deals like this solidify the auto industry's position as a major customer for leading-edge silicon. Following the previous day's slump, this announcement could provide a much-needed positive catalyst for Tesla's stock. While the market initially reacted negatively to sales figures, the long-term strategic nature of this chip deal addresses a critical component of Tesla's future, its ability to scale its AI and autonomous driving ambitions. It provides clarity and confidence regarding the supply of crucial hardware for its next-generation products. Now, Elon Musk has consistently tried to pivot the Tesla narrative from just an automotive company to an AI and robotics company. This deal strongly reinforces that narrative, showing concrete steps towards building the underlying hardware for that future. This could attract long-term AI-focused investors. While weak auto sales remains a short-term headwind, a secure, dedicated supply of advanced AI chips for future products like robotaxis could offer a stronger counter-narrative, suggesting that the company's long-term growth vectors are being diligently built out. Beyond the immediate stock market reactions, this deal has broader economic implications. The scale of the deal will likely spur further investment in research and development within both Samsung and the broader semiconductor ecosystem. ecosystem, leading to new innovations and breakthroughs. The expansion and dedication of Samsung's Texas fab to Tesla's AI chips will create high-skilled jobs in the US, from engineers and scientists to manufacturing technicians. For the automotive industry as a whole, stable and secure chip supply chains are paramount. The past few years have demonstrated the devastating impact of chip shortages on vehicle production. This deal, by strengthening a key part of the supply chain, contributes to overall stability. While overwhelmingly positive, a few points bear consideration. That is, manufacturing cutting-edge 2nm chips is incredibly complex. Samsung has faced challenges with yield rates in the past, and while the partnership with Tesla allows for collaboration on efficiency, achieving high yields consistently will be crucial for the success of this deal. The semiconductor industry remains heavily influenced by geopolitical factors and export controls, particularly concerning advanced AI chips. While this deal strengthens US domestic production, the global regulatory landscape is constantly evolving. Tesla's ambitious timelines for its robotaxi service and widespread FSD adoption rely heavily on the performance and timely delivery of these AI6 chips. Any delays in production or issues with the chips could impact Tesla's broader strategic goals. Now, in conclusion, Elon Musk's announcement of the $16.5 billion chip supply deal with Samsung Electronics is a monumental development. It's a strategic coup for Samsung's Foundry business, providing it with a crucial anchor client for its advanced Texas fab. For Tesla, it's a foundational step in securing the hardware necessary to realize its audacious AI and autonomous driving ambitions, while also significantly bolstering its supply chain resilience. For the US economy, it's a strong affirmation of the CHIPS Act's goals, bringing high-tech manufacturing and jobs to American soil. This deal doesn't erase the immediate concerns about Tesla's auto sales, but it certainly shifts the long-term narrative towards its technological prowess and vertical integration in the rapidly expanding AI and automotive sectors. It underscores the critical role of semiconductors in defining the future of technology and global industry. The ripple effects will be felt across global stock markets, influencing investor sentiment, not just for tech and automotive, but for the entire semiconductor supply chain. This is a powerful signal that despite short-term headwinds, the future of mobility and artificial intelligence is inextricably linked to the ability to design and produce cutting-edge silicon at scale. That's all for today on this developing story. We'll be back with more in-depth analysis on the intersection of crypto, AI, and blockchain. Thank you for joining us.